from the heart of where innovation, money, and power collide. In Silicon Valley and beyond, this is Bloomberg Technology with Emily Chang.
I'm Emily Chang in San Francisco, and this is Bloomberg Technology. Coming up in the next hour, Zuckerberg responds, the Facebook CEO, saying simply it is not true that the social networks put profits over people, saying he doesn't recognize the company whistleblower Frances Haugen has described. But he agrees regulation is needed. What could and should that look like? We'll discuss. Plus, Amazon's video game streaming platform Twitch has been hacked, exposing source code and how much money creators are making. The hackers' motive? To spark competition in game streaming. We'll have the details. And when Amazon founder Jeff Bezos bought 100,000 vehicles from Rivian, it was a defining moment for the electric truck maker. Why Bezos was so intrigued and the fascinating way he learned about the company later this hour. We'll get to all of that in a moment, but first I want to take a look at the market. Stocks whipsawing in heavy trading as Republicans were poised to offer Democrats a way to end the debt limit impasse. Our Ed Ludlow joins us now with today's moves. Ed, walk us through the day.
Yeah, we were down more than 1% at one point in equity markets. But you can see pretty clearly we ended in the green. The S&P 500 up by 0.4%. And there was outperformance in technology stocks. The tech-heavy NASDAQ 100 up by more than 0.6%. There's been concern, as you know, Emily, about those kind of mega-cap, high-growth tech stocks, the big names, Apple, Amazon, Microsoft. But the NYSE Fang Plus index up by 0.8%, and even semiconductors, which have been down right until the end of the session, ending in the green. Come with me into my Bloomberg terminal. You and I have been discussing some concerns about whether we get a correction in tech stocks. But if you look at the NYSE Fang Plus index, it's trading at 28 times estimated earnings for this coming year versus about 20 times estimated earnings for the S&P 500. That is the narrowest premium since December 2018. And if you remember December 2018, Emily, we bottomed out on tech stocks and then had a huge rally that set into motion several consecutive record highs. So the narrative around markets has really changed. I want to talk a little bit about cryptocurrencies as well, because frankly, we're on the march. If you take the Bloomberg Galaxy Crypto Index, we're up by around 30% over a 5-day period, 5 consecutive days of gains, the best run since May, and Bitcoin, a big driver of that. We know we crossed the $55,000 mark on Wednesday. Some growing bullishness that this is a climb higher that could be sustained for cryptocurrency. And finally, 2 stock movers that I want to touch on very quickly. The first being Electronic Arts, down by 7.4% or 7% on Wednesday, its biggest drop since November. This is about Reddit forums. Users pointing out on Reddit that the beta version of Battlefield 2042 has bugs. The power of the Reddit forums. Astonishing to see that drop. And Moderna, down 9%. Of course, countries like Sweden and Denmark are putting the Moderna vaccine for COVID-19 on hold due to concerns about some side effects, particularly in younger people. 2 stocks to watch for the rest of the week. Emily.
All right, Ed, thanks for that. Well, the idea that Facebook puts profit over people's safety and well-being is just not true, says Mark Zuckerberg in a lengthy Facebook post defending the company Tuesday night, hours after whistleblower Frances Haugen testified in front of Congress. Let's talk more about what it means for the future of Facebook and potential regulation with my next guest, Daphne Keller, Platform Regulation Director at the Stanford Cyber Policy Center. Daphne, thank you so much for joining us. I want to read a little bit to you of Mark Zuckerberg's statement. At the heart of these accusations, this idea that they prioritize profit over safety, he says that's simply not true. He adds that the reality is that young people use technology. Rather than ignoring this, tech companies should build experiences that meet their needs while also keeping them safe. The problem is that Facebook, to a large extent, has lost public trust. I'm curious, Daphne, what your reaction is to Zuckerberg finally coming out and responding to Frances Haugen's allegations directly.
Well, so I'd start by saying I think Facebook is full of people like Frances Haugen. It is full of people who care very deeply about potential harms of the platform and who are working hard to correct them. And I think in Zuckerberg's message, he got one thing really right, which is that those people need to have the freedom internally to do research and to maybe make mistakes and share their findings internally without fear that that's going to become some kind of journalistic gotcha. So I do worry that in a way this will disempower those people. But those people also exist alongside executives who, according to reporting from the Wall Street Journal and elsewhere, have done some frankly disturbing things, like the executive in India who overruled the trust and safety team to leave up posts that incited violence because they were from politically connected people. And those impulses, the desire to really do the right thing and make the platform as safe as possible, and the impulse to seek profit and be politically accommodating or sensitive are always going to coexist inside the company. The question is how to strike the right balance. I'm not sure if Zuckerberg's message has reassured his employees that that's going to happen.
Let's take a listen to one of the moments from the testimony yesterday, where Frances Haugen outlines Facebook's problems and then describes the company as being trapped. Take a listen.
Facebook is stuck in a feedback loop that they cannot get out of. They have been hiding this information because they feel trapped, right? Like they would have come forward if they had solutions to these things. They need to admit they did something wrong and they need help to solve these problems. And that's what moral bankruptcy is.
I'm curious, Daphne, what you think of this idea that Facebook may be filled with a lot of well-intentioned people who may be in over their heads. Maybe Facebook's problems are just too big for any group of people to solve.
Yeah, so journalist Mike Masnick called this the banality of hubris, that we are seeing in this report's problems that anybody who was paying attention knew or within going on with Facebook in some form all along. It's just now we have documentation of the details. And I don't think that Facebook alone can solve them. I think that with better transparency and better input from civil society organizations, from experts, from members of marginalized communities who have been reporting harms like this for years and years, we can arrive at better solutions. And having a whistleblower force that transparency onto them probably wasn't the optimal way to do it, but we need that transparency, and now we have a better idea what's going on and better opportunity for more input.
Would you say that Facebook is too big to govern or ungovernable? I mean, obviously Facebook is bigger than the biggest countries in the world combined. Is it just too big?
It is not too big to govern. It is subject to privacy regulations in Europe. It is subject to obligations to take down certain kinds of content in every country in the world, including the United States. What it might not be able to do is perfectly regulate all the online speech so that all the good things stay up and all the bad things come down. That's partly because none of us can even agree on what that would mean. But it's also because no government in history has undertaken to police people's daily speech in the way that we are asking Facebook to do. That's a monumental task.
So let's start with the US government. Should the US government do that? And if so, how? I mean, one of the most remarkable moments in the testimony yesterday was senators from both sides of the aisle agreeing they have differences, but those differences are minor compared to the issues that Facebook, they believe, is causing.
So I don't think there are a lot of great options for new top-down regulation from Congress saying what speech should be allowed on Facebook or how Facebook should amplify that speech. And this is because so much of the harmful or dangerous speech we're talking about is protected by the First Amendment. It might be disinformation, it might be hate speech, we might find it morally abhorrent, but Congress doesn't have the power to regulate it unless the Supreme Court changes its law, its interpretation of the First Amendment. What Congress does have the power to do, though, is to pass laws grounded in competition or grounded in privacy. And I actually think there are ways to get at these content issues by, for example, giving users more control over how their data is used and more dials and knobs to adjust what they're seeing in their Facebook feed. Or you could try introducing competition in the provision of content moderation on top of Facebook. This is something that my Stanford colleague, Francis Fukuyama, has called middleware, creating competition where users can choose to have a flavor of Facebook that prioritizes what their church wants prioritized, or a version of YouTube curated by Black Lives Matter affiliated groups. There are things we can do using privacy and competition to avoid having top-down speech regulation from Congress.
The leaked research from Frances Haugen also reveals a disconnect between Facebook's devotion of resources to the United States and to fighting misinformation and hate in English, and the resources it devotes to the rest of the world. And Frances Haugen pointed out that Facebook's technology is particularly bad when it comes to identifying some of these issues in languages that aren't English. How big a problem is that?
I'm so glad you're bringing that up because it's a huge problem, and it's something that doesn't get enough recognition from the US Congress, unsurprisingly, but that is no surprise at all to civil society activists from around the world or ordinary users around the world. You know, people in places like Myanmar or Sri Lanka or Kazakhstan are getting an experience of Facebook that is worse than the experience of Facebook that you or I are getting. And that's both because of insufficient support, from employees who speak the languages in those countries, or the sometimes multiple languages in those countries, but also because of the difficulties in updating the algorithms to have the sort of greater safety measures that Facebook has implemented for English, Spanish, French, major languages like those.
Where do you think Facebook is headed if nothing changes, if no regulation is put in place?
Well, that's not going to happen. Even if Congress is paralyzed in the US, the EU is passing a major new law, the Digital Services Act. It will definitely come into effect. It will definitely reshape content moderation practices. It will require Facebook to do annual risk assessments and mitigation plans and independent audits. So change is coming no matter what. And this is one of the reasons that Facebook is running ads saying, please regulate us. Their sort of best case scenario of the future is if the US requires them to do the same things that Europe was going to require them to do anyway. And those are things that its smaller competitors can't afford to do.
So then do you think some of the sort of doomsday scenarios, there are a lot of people on both extremes of this debate, are they overreacting to what we've heard over the last couple of weeks through Frances Haugen?
I don't think they're overreacting. I think particularly if you hadn't been tracking these issues and all of the things that Frances revealed are news, then it is appropriate to say, hey, this is a big deal. We should do something about it. But in terms of what are our options going forward for wise regulation, they're about the same options that we had before. And there are always limits from the First Amendment on one side to what Congress can do, but also from just the operational reality of platforms on the other side. There's not a magic wand that anyone can wave and make Facebook moderate content in a way that make all of us happy.
All right. Daphne Keller, Platform Regulation Director at the Stanford Cyber Policy Center. Daphne, great to have you and appreciate having a nuanced conversation on this. Coming up, from nicety to necessity, the grassroots site Down Detector has exploded in popularity thanks to Facebook's global outage on Monday, the largest outage ever for the social network. We're going to have more coming up next. This is Bloomberg. Snapchat was the biggest winner when Facebook had its worst outage in years. Monday, Snap saw a 23% boost in time spent on its Android app compared with the same day the week before. Telegram and Signal also recorded a big surge in usage. And the first site to detect Facebook's global outage was Down Detector. The site has become a go-to hub for outage reports across the web. From Facebook to TikTok to Disney Plus and Hulu, Down Detector provides real-time user-reported status updates on whether a website is functioning properly. For more, I want to bring in Bloomberg News cyber reporter Kartikay Mehrotra. And Kartikay, this wasn't only the biggest outage for Facebook ever, but the biggest outage that Down Detector ever detected. What did it look like from their end?
So, yeah, that's exactly right. So they first were notified by their own consumers, right? Individuals who consume the data of Down Detector reported to Down Detector early in the morning that something's wrong with Facebook's site, with Instagram, with WhatsApp. And very swiftly, they sort of stumbled upon this critical mass where they saw 100,000 complaints coming in very swiftly, and that triggered an automation in their system that sent out a tweet and messages saying, clearly there's something wrong with Facebook. And so they sent out tweets saying, Facebook's down, Facebook Messenger is down, Instagram and WhatsApp. And within minutes, the world knew that something was very wrong with Facebook's platforms.
Now, Facebook has underscored that this wasn't the result of a hack or anything nefarious, though there are certainly conspiracy theories floating out there. But what did we learn from this particular outage and what it means going forward?
Yeah, so to be clear, what we learned didn't come from Down Detector, but what we have learned is that there was an internal snafu at Facebook. What happened was they have, there's a critical protocol on the internet called DNS, Domain Name Systems, which allows a user to type in a name into a URL or open an app, and DNS converts that name into an IP address. And that is what loads the website that you and I look at. But that system was not working because another protocol called Border Gateway Protocol, which is basically like the postal service of the internet, had also stopped working. The paths that the DNS system might take to load the site didn't exist. And so it was every time we were loading the pages, we were running into a dead end. What we don't know yet is exactly why those BGP Border Gateway Protocol systems were not working, why they'd been withdrawn by Facebook. Was it because of the DNS issue, or were they having broader network problems? We're still sort of waiting for an explanation of exactly why these critical systems weren't working.
So how is Down Detector viewing this outage in the context of other outages it's seen and for the future?
Yeah, so as you mentioned, this is the biggest outage that they had stumbled upon in their history. What was really interesting while speaking with their CTO yesterday was that while Facebook was down and while users were reporting that Facebook was down, other pieces of the internet also went down temporarily. So they saw outages or temporary disruptions at Twitter, at Google, at T-Mobile, because what was going on was users were seeing that Facebook wasn't working. So they were going to these other platforms to see if this was a Facebook problem or a broader issue related to their device or their connectivity. Ironically, one of the other systems that went down for at least 10 minutes was Speedtest, which is another product owned by the same company that runs Down Detector, Ookla. People were flocking to Speedtest to see what was going on, and that knocked them out for a couple minutes too.
Interesting. It certainly was an astounding turn of events, especially in context. Bloomberg's Kartik Rocha, thank you for joining us. Meantime, Amazon's video game streaming platform Twitch has been hacked. The hacker claims to have exposed sensitive source code and details on payouts to content creators. Twitch confirmed the breach and said it'll provide updates when it has more information. For more on the story, I want to bring in our Bloomberg News Amazon reporter, Matt Day. Matt, what more do we know about what happened here and the motive of these hackers?
Motive, if we take them at their word, is they said they want to open up more competition in video game streaming. Twitch is by far the biggest streaming service in the U.S. For such game fans. And they said, Twitch is a cesspool. They wanted to open it up. And I think that definitely jives with the kind of data we've seen. Unlike a lot of hacks that are personal information of users often, or credit card numbers, that kind of thing, this is a lot of kind of the inner workings of Twitch itself, kind of the crown jewels.
Talking about crown jewels, what has Amazon said about this? What are next steps?
Amazon has been mum. Twitch has said we're working on this urgently. Typically when Amazon or an Amazon company gets breached like this, we're going to hear another statement from them before the day is out, maybe tomorrow. And then, maybe a week down the line, we get kind of a firmer, here's what went wrong, here's what we think happened resolution. The other thing hanging over us right now is the anonymous leaker suggested that there might be a second part of this. This cache might have some more stuff coming. So I wouldn't be surprised if they've got eyes out looking for perhaps another dump coming down the line.
Interesting. What would more competition in game streaming look like?
It's hard to say. This is really Twitch's market. They created it. Google's YouTube is throwing a ton of money at streamers trying to develop their own gaming service. Microsoft, famously got into that business with an acquisition, then got out of it again. Just really Twitch's market to lose, and we haven't seen, a whole lot of other competition out there.
And what details did we learn about, the content creators, especially whose information was exposed?
We learned that it's lucrative for some. The biggest payouts there, it's on the order of just short of $10 million over a few years to the top account on Twitch. We've learned that, you can make hundreds of thousands of dollars. It's not hundreds or thousands of people who are making this money. That's kind of the very upper crust, but it's certainly a lucrative business for those who have found a really big following on the platform.
Okay, well, stay tuned to your reporting. Bloomberg's Matt Day. Thanks for that update. Amazon CEO Andy Jassy says that video games, meantime, could end up being the company's largest entertainment business. This is a pretty bold pronouncement for a company that's had almost a decade of failures in gaming until now. Amazon's new hit, an online computer game called New World, was released last week and now has several million active players every day. Coming up, taking your traditional brick-and-mortar business to the skies, how Alphabet is experimenting with drone delivery in Australia. Next, this is Bloomberg. A few other tech stories we are watching. Alphabet's drone subsidiary Wing is experimenting with launching its aircraft from the roof of an Australian mall, only steps from the stores providing goods for delivery. So far in its pilot program, Wing has been working with businesses selling sushi, juice, and tea-based drinks. A pharmacy is also starting to sell over-the-counter medicine and other items. Plus, the boom in e-commerce sales has made a unicorn out of a Utah-based startup. Pattern helps companies manage their sales on Amazon and other digital marketplaces. The firm says it has raised $225 million in a new outside investment at a valuation of about $2 billion. Pattern started out selling refrigerator magnets and other trinkets on Amazon's marketplace. And activist investor Jana Partners is calling for Macy's to spin off its e-commerce business. In an investor presentation, Jana said the department store chain could follow the lead of Saks Fifth Avenue in separating that e-commerce unit. The firm says at a similar valuation, Macy's online business could be worth about $14 billion. As a whole, Macy's current valuation is half that. Coming up, getting paid to play games. We're going to take a look at the monster battle game Axie Infinity and how its play-to-earn model is paying off. This is Bloomberg. Welcome back to Bloomberg Technology. I'm Emily Chang in San Francisco. The play-to-earn revolution is here, says Sky Mavis. That is the blockchain video game company behind Axie Infinity, a game using NFTs to reward its players. And it just raised $152 million. So how is crypto changing the way we play and the way we earn money? Let's talk about it all with Ariana Simpson, general partner at Andreessen Horowitz, which just led the Series B round for Sky Mavis. So there are a lot of other options today to make money over the summer, not just mowing lawns, Ariana. Talk to us about how you see crypto changing the way we play games and how we earn money.
Absolutely. So, I think the key thing to keep in mind with Axie Infinity is that it's not just the fastest growing crypto game we've ever seen, but it's really created a movement. It's bringing millions of people into crypto and into crypto games. And what's incredibly powerful about what's happening with Axie Infinity is that the game is allowing people to earn. So it's really disrupting what we've seen in traditional games where players are producing a lot of value, they're allowing the platforms to grow and generate revenue, but they're not actually participating in any of the upside. And Axie Infinity has turned that model on its head, which is one of the reasons why we're so excited about it.
So, talk to us about this company in particular and why you are so excited about it.
Yeah, so Axie Infinity, I think, is an incredible testament to the power of entrepreneurs working through difficult cycles in crypto and really having an incredibly strong vision for what they want to bring to market. So what's happening here, I think, is historically crypto has been a pretty tough thing to get into. It has a fairly high barrier to entry. Often it's appealed to mainly technical audiences. But what's happening in Axie is you have this incredibly fun game with these cute little Axies, which kind of look like Pokemons. And people can come into the game and play and have fun. There are different battle games and other things you can do in the Axie universe. But there's a whole group of people now actually earning a living. And so I think that's an incredibly unique thing that we've seen here. So that's really what is happening at the core of the play to earn movement, where folks are being onboarded into crypto for the first time. They're earning money. We've seen incredible growth across a lot of Southeast Asia, but really globally, where people are starting to play the game in lieu of their traditional forms of employment. And this kicked off during the pandemic, during lockdowns when many people were put out of work. But in reality, it's continuing, even now, and it's giving people opportunities economically that they never had before. So that's really what this is about.
Speaking of other parts of the world, you recently led a round for the Indian crypto unicorn CoinSwitch Kuber. How big is the reach of Axie and this play-to-earn model?
We think all of these projects and companies, whether it be Axie Infinity or CoinSwitch, are really global in nature. I think crypto is starting to touch all corners of the planet. We're seeing incredible growth across sectors, and that's what we're really excited about.
As the world moves towards Web 3.0, how does that change your job? How does that change the nature of investing?
The way we think about it is that eventually crypto will become a part of the technology stack that touches almost everything. In the same way that there used to be web companies, and now really almost all businesses in some way use the internet, whether or not they're what we would traditionally consider internet companies. So we think that components of the crypto stack are going to become part of all companies, and so be a core piece of the technology future across sectors.
As the blockchain ecosystems gain ground, there are calls for more regulation. We still don't even know what regulation for crypto itself will look like. What do you think regulation of this new universe should look like?
We really encourage regulators to think carefully about the policies they're putting in place. We're certainly pro-regulation as a firm, and we've built out a policy and regulatory team to address these issues. What we want to make sure is happening is that the rules of the road are clearly spelled out so entrepreneurs can follow them, and that policy makes sense for the particular subsectors. So all of crypto and all of Web3 are not identical, and so the rules should make sense for the parts of the sector that they're meant to identify, rather than being blanketed and not particularly tailored.
Sam Altman, who ran Y Combinator for many years, you've also backed his idea to swap crypto for an eyeball scan. Tell us about this.
Well, we can't really comment on any rumors. We think it's up to entrepreneurs to tell their story when they're ready. What I can say is that we're incredibly excited about the future of crypto and technology in general. And we as a firm are particularly excited to back very big ideas. And this certainly sounds like a big idea.
All right. Well, Ariana Simpson, appreciate you taking the time to join us and paint the picture of this brave new world. General partner at Andreessen Horowitz, thanks so much. All right, coming up, from new eco-friendly routes in Google Maps to information on energy-efficient appliances, Google is working to make your everyday routine green. We're going to speak with Google Chief Sustainability Officer Kate Grant. Coming up next. This is Bloomberg. look up driving directions on Google Maps, a tiny leaf will pop up showing you the most fuel-efficient route. Or if you're in the market for a new dryer, you might get served the most energy-efficient option. These features are part of a series introduced by Google to steer people to more environmentally friendly choices. Joining us for a closer look at Google's Green Pivot is Kate Brandt, Google's Chief Sustainability Officer. So talk to us about the significance of these new initiatives and what impact you hope they will have.
So, search interest in sustainable action is really at an all-time high. And we know that people are looking to make more sustainable choices. So last year, as part of our third decade of climate action at Google, we committed to help 1 billion people to make new sustainable choices by 2022. And what we found is one of the biggest obstacles is that people don't have the information or the tools necessary. And so this is really where we feel like our products can come in. And today we announced new features across search, maps, Nest, travel. We're helping people to understand the carbon footprint of their travel, giving them useful context, making people aware of more fuel efficient routes or appliances where they're available, and even making it easy to support clean energy right from home. So we really think the best way for us to be helpful is to make the sustainable choice the easiest choice.
How will you identify the most fuel-efficient dryer? For example, is Google doing its own research to elevate certain products?
Yeah, so when it comes to Google Shopping, what we're doing is we're showing people when they're going to make a large purchase for a home appliance. So that could be something like a furnace, a hot water heater. We're giving them helpful information on ways that they can find solutions that are more cost effective and more sustainable. And so those suggestions will appear right in the search function, and then people can click on them to learn more about the choices that they have.
And you obviously have Google Maps, you have Waze. How do you determine the most fuel efficient route?
Yeah, so one of the other features that launched today here in the US is eco-friendly routing. And so, oftentimes what we find is the fastest route is also the most fuel efficient route. And also when it's not, we'll now show you if a more efficient route is available and help you understand the impact right in the app. So you can choose if an eco-friendly option makes sense for you. And what we estimate is that making this change can save an equivalent amount of carbon to taking 200,000 cars off the road every year.
So, talk to us about how you are going to quantify this, how you will measure success.
So for us, this is all about, first and foremost, making the sustainable choice the easier choice. So we want to look at reach. We want to ensure that we're working towards reaching 1 billion people for new sustainable actions. But also we want to quantify the impact. So I mentioned, with eco routes, we're looking at an equivalent amount of reductions to taking 200,000 cars off the road. We also have products like Nest. The Nest Learning Thermostat has already saved over 8 billion kilowatt hours of energy for our customers. And that's before today's announcement of our new Nest Renew feature, which is a service that's going to help people automatically switch heating and cooling electricity usage to times of day when energy is cleaner.
Curious if at some point you might disclose Nest sales. I don't believe you share that number yet, and how Nest actually impacts the power grid.
Yeah, so no news today on Nest sales, but certainly it's been a darling of our sustainability product line for a long time. And again, I think a really powerful way to show both impact and to give people opportunities to save energy and to save money on their utility bills. So, Nest has been a great product for a long time, but with the new Renew feature, we're excited about energy shift. And we're also excited about another new feature called Premium, which lets people match their fossil fuel electricity use with renewable energy credits from the same projects in Google's high quality energy portfolio, just for $10 a month.
The SEC, meantime, is lasering in on greenwashing. And I wonder, what does Google want to see the SEC do there? You've got a lot of companies out there that are claiming, these green initiatives that maybe aren't as green or as helpful as they appear to be.
We think that it is critical to drive positive impact and choice. So everything that we've announced today is all about giving people helpful information and making it easier, and really putting those useful features right in our products in ways that provide that option. So whether it's the fuel efficient route, whether it's the greenest flight, we think it's critical to have useful and high quality information. And that's really what we're going to stay focused on.
So we've also got COP26 coming up, and every year Google seems to be trying to move the ball forward. Where do you hope Google will be by 2030 when it comes to all of these initiatives that you're putting into place now?
Yes, COP26 is, of course, a really important moment on the calendar, just 25 days away. And we were proud today for our CEO, Sundar Pichai, to join 28 other CEOs in the Business for Glasgow letter that's showing the support of business for a strong outcome at COP. Here at Google, we are laser focused on our third decade of climate action, with our goal to reach 24/7 carbon-free energy for our operations by 2030. And then this nearer term goal we've been talking about today to enable 1 billion new sustainable actions by 2022. And really today's announcements are just the beginning.
All right, Kate Brandt, Google Chief Sustainability Officer, thanks for joining us today to share all of that with us. Well, Cathie Wood's ARK Investment Management is shifting to Florida. ARK is shutting its New York office permanently at the end of the month and moving its corporate headquarters to St. Petersburg. The work-from-home revolution has prompted companies to rethink their presence in expensive business hubs like New York and San Francisco. And coming up, Jeff Bezos, billions of dollars, and a bug-eyed delivery van. We're going to dig into the real story behind the startup's charge to an $80 billion valuation. This is Bloomberg. General Motors plans to double its revenue by 2030 as the car maker expands its electric vehicle lineup, builds out an autonomous ride-sharing business offered by Cruise, and pushes into subscription-based services in its cars. My colleague David Weston caught up with CEO Mary Barra.
Well, I think it's really measured by selling more electric vehicles in the United States than anyone else. And the way we'll do that is with a full portfolio of products built off of our Ultium platform. Whether starting with the Hummer, the Lyriq, but then the Silverado E, more trucks to follow, but also very important affordable entries that allow everyone at different price points and needing different features and functionality to buy a General Motors electric vehicle.
Well, you have emphasized affordability, which may distinguish you from some other EV manufacturers. Can you do that and make the sort of margins that you have in mind for General Motors?
Well, with the scale that General Motors has, as we continue to leverage Ultium, we get the scale, we keep leveraging the science to get the cost of the battery cells down. Yes, we have a plan, and that's why we're very confident that as we move forward through the end of the decade, we're going to see margin growth.
Mary, I don't want to skip over the Silverado E. You mentioned it there in brief. Everybody's been waiting for this now. We've seen some pictures of it. I know you're going to have a formal unveiling, I think, at CES coming up at the beginning of next year. Why a glass roof?
Well, I think, one, because we can. And I think when you see the entire Silverado E, you're going to see what doing a truck off an all-electric platform, not trying to retrofit off of an existing platform, opens up all new design capability, functionality. I'm so excited because I think the Silverado E will be a very strong performing truck, but it's going to bring new buyers into the truck market, into General Motors' truck portfolio.
Mary, I'm here in Washington actually because of what's going on up at Capitol Hill with the budget. Give us a sense of what you need, General Motors needs from the government, and particularly talk about charging stations, because the budget proposal that's being kicked around at Capitol Hill includes some serious money for charging stations. Do you need that in order for General Motors to be a true leader in electric vehicles?
Well, we're investing in infrastructure, but we do think that the federal government is going to play a very important part, because think about it, David, we need to make sure that someone who only owns one vehicle, who may live somewhere where they don't have designated parking, to have access to reliable charging, because that's what is going to enable them to buy an electric vehicle. So we think it's a partnership between business and the government to make sure we provide that infrastructure across the country. And in addition to that, we want to make sure that we see the revision revisions to the EV tax credit that currently right now, penalizes first movers in the way it was originally constructed.
So you do need some help, again, on the affordability front from the government in terms of tax credits.
Well, we think that's just going to accelerate EV adoption, and we think that's a very important part of accomplishing the president's goals from a climate change perspective, and that will expedite the adoption of EVs. And again, when we have a full portfolio with many different entries at different price points, that's why we're well positioned.
Mary, one of the things we've talked about before is we think of General Motors as a vehicle company, a car company, if you will, but you conceive of it somewhat differently. It's a platform company, and some of your announcements today go to some of the software that can be put onto this platform. Talk to us particularly about, for example, Ultra Cruise.
Sure. Well, if I start with looking at what our Ultium platform gives us this platform to do, not only a full range of electric vehicles, but also into other markets, other transportation type vehicles. On top of that, then we have the vehicle intelligent platform that really allows for over-the-air updates to almost any part of the vehicle. Now we're launching Ultify, which gives us really a platform that we can offer services, subscriptions like Super Cruise, that it's not just you buy it in the vehicle, but it can be one of those things that you use it on demand with a subscription. So we're very excited about the business that we're unlocking. We really feel General Motors is moved from being an automaker to really a platform innovator, and the vehicle itself has become a software-defined vehicle that it really is going to unlock a lot of revenue that's at different margins and really serves the customer.
All right, David Weston there with GM CEO Mary Barra. Well, sticking with electric cars, Jeff Bezos just skipped ahead on the reservation list for a Rivian electric vehicle. Bloomberg has learned that Rivian shifted its focus in the past month away from its own consumer cars to prioritize building delivery vans for Amazon. According to sources, the e-commerce giant is the priority for Rivian, and a big part of its eye-watering $80 billion valuation is based on the e-commerce giant's investment and order. Bloomberg's Ed Ludlow here with the scoop. Ed, a lot of people want to know when they can get a Rivian, and nobody wants to sit on a multi-year-long waiting list. What's going on inside the company right now?
Yeah, Rivian's running this like three-ring circus, right, where it has its own pickup and SUV and the Amazon van all trying to happen at the same time. Production on the pickup started modestly at the end of August and into September, and now it's kind of running at a steady rate. Sources tell us that Rivian is shifting resources, people, to the Amazon van because, frankly, Amazon is one of its biggest investors. This is an important, firm order that Amazon's made, 10,000 units due by the end of next year. We understand, according to sources, 300 will be delivered this year, and then the rest of the 100,000 over the next decade. But there's a lot of pressure, and they can't do it all at once. So what we're hearing right now is, as you say, Amazon is the priority.
So let's talk a little bit more about how Amazon and Jeff Bezos in particular got into Rivian, because it really made a difference to the company's future prospects.
Yeah, so in 2018, Rivian was in stealth mode. No one knew anything about them. And they hired a production company to film some video, which was owned by Pete Berg, the famous director. He contracted with a company called Black Ops Aviation, owned by Lauren Sanchez, Jeff Bezos' now girlfriend. And they shot this material that was designed to be shown at the LA Auto Show that November, when Rivian would eventually kind of have its big reveal. And according to sources, this all kind of happened organically, right? You had the film production crew, Black Ops Aviation, doing a lot of work with Rivian. Bezos is friends with Pete Berg, Lauren Sanchez is his girlfriend, and kind of organically, through these people that he knew, it got back to him that he had to check out this startup with this battery electric pickup truck. And of course, in due course, Amazon did its due diligence. Bezos flew to Rivian's facility in Michigan to see it for himself and was sold on this kind of vision that RJ Scaringe, the CEO, had, according to sources. And the rest is kind of history.
It's quite some recommendation, Ed. Where does Rivian now sit in Amazon's plans?
Yeah, when Bezos made this big announcement in September 2019 about how Amazon was going to move forward, reducing its carbon emissions, Rivian was right at the center. It was the centerpiece, 100,000 delivery vans. But it's interesting, the agreement between the two gives Amazon exclusive rights to all the trucks that Rivian builds for the first 4 years. It has the right of first refusal for the first 6 years. So clearly it's stacked in Amazon's favor. But Amazon also has deals with others. You know, it buys vans already, gas vans from Ford and Mercedes, for example. So it'll be interesting to see if they stick with Rivian or go with others. But in any event, you know, Rivian really is kind of the poster child of what Amazon is trying to do, particularly in last mile delivery, where most of its carbon emissions lie.
And that Rivian valuation, does that stand up without Amazon?
Yeah, look, according to sources, $80 billion for a pre-revenue company is eye-watering anyway, but it's all about that Amazon investment and Amazon order.
Okay. All right. Ed Ludlow, thank you. Great in-depth piece on Rivian and the relationship with Amazon. You can check out Ed's piece at Bloomberg.com. And that does it for this edition of Bloomberg Technology. Make sure you tune in tomorrow. We're going to be joined by Box CEO Aaron Levie and Cisco CEO Chuck Robbins. I'm Emily Chang in San Francisco. This is Bloomberg.